What if I told you that the Iraqi dinar could be standing at the edge of one of the most dramatic financial changes in modern history? Picture waking up tomorrow, checking the exchange rates, and instead of seeing more than 1,300 dinars for $1, finding it nearly equal to the dollar itself. At first glance, this may sound like pure fantasy, but increasing discussions suggest that 2025 could be a turning point for Iraq's currency. Some even claim the value could strengthen to a level where $1 equals only 1.95 dinars. If this ever came true, it would not only transform Iraq's economy, but also reshape the lives of millions while drawing global investors' attention. Today, we will explore what this speculation really means, what a currency revolution might look like, and why the story of the dinar is far more layered than many realize. To understand why so much attention is fixed on Iraq's currency in 2025, we must first step back to see where Iraq stands today. At present, Iraq operates under what is known as a fixed exchange rate system. This means the Central Bank of Iraq sets the value of the dinar against the dollar and works actively to keep it stable. Right now, the official rate sits close to 1,320 dinars per US dollar, but here lies the issue. Walk through many local markets in Iraq, and you'll often find a very different rate. This gap between the official price and the street value has created serious problems. Economists call this a dual exchange rate system, which often leads to corruption, confusion, and instability. For years, Iraq's government has spent billions from its reserves just to defend the official rate, but this has placed heavy pressure on national finances. This is where the concept of a managed float system enters the conversation. Unlike a fixed rate, a managed float allows the currency to shift with market supply and demand. Though the central bank would still step in to limit wild swings, think of it like steering a boat on a river. The current does most of the moving, but the captain can adjust when needed. For Iraq, this could bring both opportunity and risk. Now let's address the number stirring the most excitement: 1.95 Iraqi dinars per US dollar. If this ever happened, it would mean the dinar actually trades stronger than the dollar. Considering today's rate of 1,320, such a leap seems unimaginable. Yet some experts argue that Iraq's real wealth, its enormous oil reserves, rising gas production, and untapped mineral resources could theoretically back a much stronger currency if the right reforms were made. Iraq holds the world's fifth largest proven oil reserves. And with energy playing such a decisive role in global markets, the country's potential is undeniable. But the key question is whether this target is realistic or simply wishful thinking. The truth is, Iraq still faces enormous hurdles: political instability, corruption, and outdated infrastructure. Frequent electricity shortages, weak transport systems, and overdependence on oil keep the economy fragile. And because oil makes up most of government revenue, price drops quickly damage both the budget and the dinar. While the dream of 1.95 excites many, it cannot be achieved without years of consistent reforms, reliable governance, and strong international support. Even so, smaller steps toward a stronger dinar could change lives for everyday Iraqis. At present, many families struggle with the high cost of imported goods like food, medicine, and technology. If the dinar strengthened, imports would become cheaper since the currency would buy more against the dollar. Imagine paying less for groceries, medicine, or a phone simply because the dinar carried more value. For middle-class households, this could feel like a pay raise without salaries increasing at all. But it's a double-edged sword. Iraqi businesses exporting products abroad could struggle because their goods would suddenly seem more expensive to foreign buyers. Consumers might celebrate, but exporters would feel new pressure. For Iraq to truly benefit from a stronger dinar and a managed float, it must first make key changes. The central bank would need to stockpile large foreign currency reserves as protection against shocks. At the same time, Iraq's financial institutions would need to grow stronger and more capable of handling complex trading. These reforms are not small undertakings. They require serious efforts to fight corruption, improve transparency, and build confidence among both citizens and global investors. Without these steps, any attempt at a new currency system could collapse under stress. History from other nations provides useful lessons. For example, when China began loosening its fixed exchange rate in 2005, the yuan strengthened gradually over years, guided by reforms and careful management. Other resource-rich nations that adjusted their systems also moved slowly, step by step, to avoid disruption. The takeaway for Iraq is clear. If it moves toward a managed float, changes will be gradual, not overnight. Still, even modest gains could be life-changing. Imagine the dinar moving from 1,320 to 1,000, then 800, and 500. Each improvement would boost purchasing power, lower import costs, and build international confidence. Over time, investors could start to view Iraq as a stable, emerging economy instead of a risky market. This shift could set off long-term growth. A stronger and more credible dinar could encourage international firms to invest in Iraq's infrastructure, technology, and industries outside oil. Gradual improvements could lift millions of citizens into better living standards, while offering more opportunities for younger generations. That's why experts are now pointing to 2025 as a potential window for important moves by Iraq's central bank. While it's unlikely that one morning in 2025 will suddenly reveal a 1.95 rate, it is possible the country could announce a move to a managed float system. That step alone would send a powerful message that Iraq is ready to modernize its currency and economy. How quickly things develop from there will depend on oil revenues, politics, global conditions, and the success of internal reforms. The bigger story here isn't just about currency values. It's about whether Iraq can rebuild its economy, restore trust, and claim its role in global finance. But it's also important to stay cautious about rumors. Over the years, the dinar has been tied to scams and false promises, with some claiming instant overnight reevaluations that would make investors rich. But history shows this isn't how currencies evolve. Real, lasting changes come slowly through reforms, sound policy, and sustainable growth, not sudden magic jumps. That's why promises of instant riches should always be questioned. The real opportunity lies in long-term transformation, not quick speculation. Another factor shaping this story is Iraq's regional environment. The Middle East is undergoing significant change, with countries like Saudi Arabia, Qatar, and the UAE pushing reforms and diversifying their economies. A stronger dinar and flexible exchange rate would place Iraq within this regional trend. Yet challenges remain. Regional instability, conflicts, and rivalries could slow down or complicate Iraq's efforts. To succeed, Iraq must not only handle domestic reforms, but also maintain balanced relationships with neighbors and global powers. Stability both inside and outside its borders will be critical to any currency transformation. Even so, we must not underestimate the obstacles ahead. Iraq's political system remains fragile, corruption is widespread, and infrastructure demands billions in new investment. Citizens still face frequent electricity shortages, water problems, and outdated systems that weigh heavily on daily life. Without solving these deeper issues, even the strongest currency policy could struggle. This is why experts emphasize that exchange rate reform is only one part of a much larger puzzle. Iraq must also rebuild its economy, diversify beyond oil, and strengthen governance, if it wants true stability. So what does that mean for the bold projection of moving from 1,320 to 1.95? The honest answer is that while Iraq does have the resources and potential for a much stronger dinar in the future, such a dramatic shift is unlikely to happen in the short term. Achieving that level would take years of steady reform, consistent leadership, and a diversified economy. But what we can realistically expect is that 2025 might mark the first step in this journey. A move to a managed float would be a clear signal to the world that Iraq is serious about shaping its financial future. If Iraq succeeds, the impact could reach far beyond its own borders. A stronger, more stable dinar could invite global businesses to trade more actively with Iraq, encourage more banks to operate there, and bring in investors who once saw it as too risky. This ripple effect could strengthen the Middle East as a whole, proving that even nations with troubled pasts can transform through reforms and vision. In this way, the dinar's journey could become a symbol of recovery, resilience, and renewal. Yet again, none of this will be easy. Iraq's politics remain uncertain, corruption is high, and infrastructure remains weak. Unless those core challenges are resolved, even the best monetary policies could fall short. As we look toward 2025, the Iraqi dinar story is one of both optimism and caution. Optimism, because Iraq's vast natural resources give it a strong foundation for future growth. Caution, because the road is filled with risks that cannot be ignored. Whether or not the dinar ever reaches 1.95, the real question is whether Iraq can build a stable, diversified economy that works for its people and attracts global trust. For now, all eyes remain on Iraq's central bank and its next move. Why? And as this story develops, we'll continue to bring you the updates and insights you need to follow one of the most fascinating currency journeys of our time.